You remember Eric Holder? You hold this, Eric. Eric Holder, who said they're too big to jail, didn't convict one major criminal on Wall Street, and now he's working for the white shoe boy firm over there on Wall Street that protects the criminals that he was supposed to bring to jail.
George Soros, we did a report recently about him buying up tons of gold, and now he's basically stating that the $30 trillion Chinese debt bubble is about to burst. Is it, and what does that mean for Americans?
The global economy is bursting. Look at the data that just came out from Japan this past week. Exports were down 10%. To China, where they export a lot of their stuff, down over 7%. So people will say, well, the yen is strong, so that prohibited them from selling more because the price of their product is too high. Okay. Imports were down 23%. So if you have a strong yen, you're buying stuff cheaply. It's a slowdown. It's a global recession. The Chinese bubble has already burst. They're just keeping it pumped up with more stimulus, and it's still not working because you saw the latest import-export data again that just came out showing negative trends on both sides. And then we heard from Sam Zell, the big real estate developer in the United States. What did he say? That anybody that can't hear the bubble bursting in real estate, he's in the business of selling hearing aids. Then you heard Druckenmiller coming out and saying, people want advice on what to do. I'm paraphrasing, of course. Get out of the stock markets. And then we heard from J.P. Morgan Chase Bank. Their division is saying for people to invest in gold. So we're looking at failed policies globally. Look at the data in the United States. Look at the last quarter's earnings. They were down, corporate earnings were down 7%, fourth quarter in a row for corporate earnings falling. So why would anybody believe that there's a recovery? And we believe that this global debt bubble that Soros and others are talking about, including ourselves for how many years, is about to burst because the central banks have run out of schemes undreamed of. Can't go into deeper negative interest rates. It's not working in Europe. You're seeing the numbers coming in now, 16-month lows across the board in different sectors, and they're negative interest rates, and they've increased stimulus from 60 billion euros a month to 80 billion euros a month, and now they're buying corporate bonds. So it's not working. It's going to explode at some time, and that's why we believe gold to be, we don't give investment advice, and we're not sponsored by anybody in the gold business. There's no advertisements in our Trends Journal. We believe gold is the only safe haven asset to have along with silver.
So give us a snapshot then. If that bubble bursts, what will happen to the global market?
Oh, the markets are going to panic when they raise interest rates in the States. That's what you're seeing. Because the emerging markets, when they had all that hot money flowing out from quantitative easing and zero interest rate policy, borrowed all that dough. That's what drove the markets up. And that's what brought the commodities boom when it peaked in 2011. Now they have to pay back that debt as commodity prices are going down in the emerging markets. So whether it's Brazil, Venezuela, Argentina, Chile, Colombia, Ghana, Nigeria, Algeria, you name the country, Norway, Australia, Canada, look at their currencies going down. Now, they borrowed all this hot money. They borrowed it in dollars. They raised the interest rates. They have to pay that money back with a stronger dollar, a weaker currency. How are they going to pay it back? They're not. The ticking time bomb that the central bankers have created is about to explode.
Now, let's take a look at Moody's now, because they just cut Deutsche Bank's credit rating. How do you believe that's going to affect their unsecured debt and derivatives?
And they haven't only downgraded them, they've downgraded downgraded Saudi Arabia, Bahrain, Qatar. They're downgrading around the world. There's going to be a debt crisis that's going to be at the level of the crash of 1929. We're going to see something we've never seen before in the history of modern economics, because in the history of the world, we've never had negative bond yields. Now 40% of the bond yields around the world are in negative territory, which means, you know, you're really a nice guy, Gary. Loan me some money. When I pay you back, I'm going to pay you back less than what you loaned me because I like you so much. And we've never had negative interest rates that inflated the equity markets to the tune, for example, in the U.S., stock buybacks are hitting a new high right now, over $60 billion a month, because they're borrowing the dough for nothing, and they're boosting their equity prices. And the merger and acquisition activity, these are the only two elements that have increased the equity markets. That's coming to an end. Again, we're looking now at valuation, corporate earnings down 7% this quarter, fourth quarter consecutive down. We're going to see an explosion like we've never seen before.
So is the dead cat bounced over in the stock market? Are we going to see stocks, or are we going to see stocks going to free fall again?
It's hard to tell because it's so manipulated. So again, the whole system is manipulated. It's a rigged game. This isn't empty talk. It's fact. You know that they manipulated the Forex markets, the currency exchange, traded at $5.3 trillion a day. They rigged the LIBOR rates. They're rigging the gold markets. You saw 6 banks convicted of felonies for rigging the LIBOR, the interest rates, and the currency markets, the Forex, and not one head rolled. Because the liar-in-chief who lied his way into office, Obama, that's now playing the legacy game, going around the world saying what a wonderful cat he is. And people forget that when he lied his way as candidate Obama into office, he was going to bring a whole new team into the White House and sweep it clean of the dirty cats that were in there, and instead brought them all back, including Eric Holder. Yeah, the Slimer under Bill Clinton that gave executive, leniency to people convicted for high crimes after when Clinton was leaving office, clemency. He brought him in to watch Wall Street. And you remember Eric Holder. You hold this, Eric. Eric Holder, who said they're too big to jail, didn't convict one major criminal on Wall Street, and now he's working for the white shoe boy firm over there on Wall Street that protects the criminals that he was supposed to bring to jail. So where's it all going? It's going to come down on us. The big guys are continuing to rob and rape us. They're phony. They're propping up the markets with their phony inside deals. Who made this thing up called a plunge protection team? In capitalism, the markets are supposed to rise and fall on their own merits. No, a plunge protection team is when this thing goes down, the cats that are the inside, the ones that Holder is holding, yeah, they're the ones that get the free ride out while the rest of us go down.
Well, Gerald, it certainly has been a pleasure having you back on at the Next News Network, and we look forward to having you back on again soon.
Always great being on with you, and thanks for all that you're doing.
Thank you as well. All right, folks, that was Gerald Celente with the Trends Journal. Please go to the website, pick up a copy, and hit that conference and become an entrepreneur. Well, that is it, folks. Go ahead, weigh in the comment section below. Subscribe for updates. If you like what we're doing here at the Next News Network, give us a thumbs up and share this exclusive interview. For the Next News Network, I'm Gary Franchi.
badass shirt now available. Link in the description.